afternoon, all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday, the 8th of August, 2019, getting on to 2:40 p.m. Central Daylight Time. An up day in the grains, but I don't know that you can read anything into anything until we get into Monday. We get the WASDE report, which is going to give us an idea of yields, acreage, and harvested acreage, especially for corn. Now, why am I focused on corn? The main reason is plus or minus acres might have gone to beans or not gone to beans. And you look at it to where this acreage that the government's going to be having, a new number is going to come out. And I write about this tonight in my report, but we'll talk about that later and another time. And I'm talking my evening update that I write the commentary on. When you take a look at the energy markets, a bit of a bounce today as the stock market's getting a bounce. So it's a risk-on day, which is putting down the metal markets to a degree, putting down a number of the currencies against the dollar. But after all the action we've had, and given that we're in the dog days of summer, in the financial markets, who knows? So let's go to the grains and concentrate on something that's growing right now, and it is soybeans, corn. You got the spring wheat, and you're playing with a lot of markets here. So we're still in a down thrust because the market has gotten this pattern where it's still underneath this 18-week moving average of closes. That number is 867. I would be very not surprised to see the market get to that at the end of the week and just sort of hang around here as it waits for Monday's report. Could I be wrong? Hey, I'm like Swiss cheese. I've been wrong plenty of times. When I look at the market, and I drew for you on the daily chart a downtrend line, you see that it comes in right through here in the mid 880s. We're sitting at 883, so just a few cents higher, you start attacking that line. By the way, you could call this a wedge, a descending wedge. This could be the base of it, and I tied that back to the gap in the chart that we just filled over the past few days here, and now the market coming up to the resistance line. That's the traditional chartist way of looking at it. Not traditional is my other attitudes and the way that I look. I created an indicator called a swing line that's on our different chartware services. And what this does is it shows you the recent lows and highs and is the market trending. Let's first define a trend. An uptrend has higher lows, higher highs in the swing line. That's an uptrend. A downtrend would have lower highs, lower lows. So what the market did recently is right here, it negated the downtrend because you had the pattern of the lower highs. You came through that on this day. You started playing sideways, and now you're trying to resolve a bit to the upside. When I look at where the market might go for resistance, I see the combination of the 18-day moving average of closes. I call that MAC in the 100. And that comes in between 891 and a quarter and to the $9 level. So in looking at it, you start up about 10 cents higher than here in theory. The problem is that number is going to drop tomorrow. And the reason is this is a moving average. So if we look at these last days, you're going to drop some of these days back here on the 18, and that number has been dropping about 2 cents a day. I would look for a penny and a half, 2 cents lower than this right now. So let's call it that 890 level should be the resistance early on tonight. When I look at Bollinger Bands, that's these black dashed lines. And what are they? They are an algorithm designed to keep the market trading within those bands 95% of the time. Now, there's more of an art to it than just that. And it is an art. When you work with it, you learn, is it running the band? Is it getting away from it? And part of what I do is I use filters of momentum to get a feel for that. And what the market had done is we had the slow stochastic study that typically a stochastic, the traditionalist looks at it, that when you get down to the 20 level, you're oversold. When you get up to a level that's in the 80 level, you're overbought. I carried it a lot further than that with the developer of this, George Lane, and I came up with the idea that at times you convert and lock in that slow stochastic. When it does, it offers two things. Number one, it tells you that until the red line gets back over 20 on a closing basis, that the marketplace is probably still looking for the pros to be sellers on the rallies. When it loses that, it is not uncommon that you get that theory of being bearish coming away. The market's changed its momentum, and often Not always. The market will look at the closest of these major moving average, the closest, and make a run towards that average. Does it happen all the time? Clearly not. Does it happen? Very often. I'll let you do the study on that and you tell me. When you come to the meal market, here too you've lost the embedded reading. So this market also has at this point higher lows, higher highs. It's not in a downtrend. By the way, beans aren't in an uptrend because the bias is still down, as you can see that under it. It's neutral. It lost its downtrend, and meal has lost its downtrend. That is very different than being bullish. I think the shorts have come out of this market or are coming out of these markets in anticipation of what they want to redo come the USDA report on Monday. In the oil, I've been telling you, this is like that tail of a dog. Whip the front body and it whips around because it's not the market in super demand. It's part of the crush spread. So you've gone from the lower Bollinger Band basically to the upper band, and traders get whipped in that. For me, this is a very difficult market to trade. But if you take a look, it's telling part of a story. It's building something here, be it a top or a base. I'm inclined to think it's a base the way that it's acting because of momentum. But this whole area is starting to be something that we're whipping around. And when you leave bases or tops, you get rather dramatic moves. So this base or top formation, I don't know which one it is yet, I'm looking at it hard. In the corn market, the bearishness of this market abated right here when you lost the embedded reading. The first target, and it hit it all in the same day, was the 100-day average in green. If it can extend, and I think I've said that every day this week, you might put in play the 18-day average of closes. And that seems to be what it's trying to get up to, like in the beans, which I call that line in the sand, and we'll see what the market does. The downtrend ended, but I don't know that an uptrend has begun. In the wheat market, you've entered an uptrend, different than the others. Now, this is September. I intend then moving very, very quickly to the December contracts because we're already August 8th. You don't want to be in line to take delivery of this contract, but that's where all the volume is trading right now, so I've kept it on. You've got higher lows, higher highs, and the very first close, as you can see, over the 18-day average in a while. So unless and until this market takes out 477.5 bases this pattern, the potential is there to get to the upper Bollinger Band and at the very least fight a battle between the 18-day average and the 100 to see if the bulls can keep control of the market. In the sugar market, you got for the first time in a while down yesterday, not today, to the lower Bollinger Band. And as I've said before, when you come from an 18-day average and you hit a Bollinger Band top or bottom, I believe that's where pros take some money off the table. So yesterday you exceeded it, today you're back over that band. It's not a change of trend, the trend is down, but you are oversold, you've hit a price target, and that's how I'll view the market. Resistance back up at this level, the 18-day average, but in an oversold market, I don't think anybody's going to be super aggressive. In the coffee market, I said yesterday, be careful if you take out 97.75 because that breaks this pattern of lower highs, lower lows, and that happened today. Now, what it did keep and what rules the chart is that it kept the embedded reading. So that part of the market's good, but you've gone into a pause stage, and I still wouldn't be surprised if pros have taken money off the table. If you extend the rally, you might lose the embedded reading, which then calls for prices maybe to go to that 100-day average, the closest of the main averages, and if it can exceed that, the 18. But I don't see anything yet bullish on the chart. I see nothing that wants to keep it overly bearish, but it is still in the bear camp because it is stochastic. Cocoa, still with the embedded reading. Are you learning the power of embedded? If you're not, go back to some of these other videos. But lower high, lower low. Until that red line pops over 20, I say that the rallies in this market continue to be sold by the pros. They're not even giving you a chance at a rally. They're just hanging here. This is called running the Bollinger Band. It's classic as to what this is. But let's think about this. The market's been under the 18-day average. The bias is down. You lost the bullish pattern when you had the lower highs, lower lows anyways. This other part of the break from here to here You'd have to be stubborn to be hanging in if you're not a chartist. If you're a fundamentalist, I don't know what you're doing. In the cotton oversold, you got back to the right-hand side of the Bollinger Band. You've got a USDA report that might impact cotton. But what do we really have? We have hot weather. We've got a heat dome that is spread over the southern plains in Texas, and you're getting a bounce because there might be some stress. I will say that the trend to the downside ended today. Actually, it ended yesterday with the outside day up, and you got the follow through today. Is the market bullish? No. It's no longer in the bear camp as a chartist at this point. There's a big difference between the two. In the cattle market, you've been hanging here for 4 days at the lower Bollinger Band in a downtrend, in a market that momentum is flattened out at and is not yet oversold. Now, where's the resistance? Back at the 18-day average. The support's the lower Bollinger Band. So far, the bears still have control of this market. Bias down, momentum still down, trend down is defined by the swing line. In the feeder cattle, you have a market with a lower, actually you've got a lower low here. I'm wondering if I could say that this is the line pointing down or if it's up here. It's a confusing chart because you had an outside day up and you took out the low of that, and it hasn't really restructured itself yet. It's caught in this part here. I don't know what to do with that. In the hog market, the market is oversold. It's the first thing my eye goes to. The trend has been down. If the market takes out 68.77.5, you will have broken the pattern of lower highs, lower lows. But will you have? You've already broken it. Do you see the higher lows and lower highs? You've gone into neutral no man's land. And that's how I'm reading that particular chart. By 5 p.m. today, that is Thursday, August 8th, Central Time, I'm in Chicago, my special report in metal, specifically silver, will be posted on our website. So if you're a silver trader or interested in silver, I cover the price counts, I cover quarterly charts, monthly charts, weekly and daily in this review. A lot of people have been asking about silver, so I thought that I'd do it. Now, how do you get to it and everything? Well, you have to go to our website, www.iraepstein.com, and when you're on the website, and that's the ideal way, you can go into our research area and you'll see Ira's special metal report. Click on it. Away you go. If you need help, call my staff. They'll be happy to help you at 866-973-2077. It's summer, so they don't stay here much beyond 4 or 5 o'clock, so be aware of that. I'm Ira. You have a good day. Talk to you tomorrow.